So you got the U.S. fighting for market share and the Saudis are fighting for cash. Saudi Arabia has said Saudi Aramco is worth more than $2 trillion, but does the kingdom have to settle for less? This is what Bloomberg reporting has shown. A person familiar with IPO talks said they've placed the figure at less than $1 trillion. A person in the Saudi government, $500 billion. Would McKinsey, $400 billion. With us is Tom Petrie, Petrie Partners chairman, joins us now. Tom, those are crazy figures all over the board. What's Saudi Aramco really worth?
Well, pinning that down is going to be a market process, but it's my view that probably the Wood Mac analysis strikes me as somewhat low. But I do think a market test is going to be the answer to the question you ask, and I think it'll be somewhere between some of the other numbers you've heard and that prediction that was made, what was it, 6 months ago by the Saudis. I just want to add one thing. We're not involved. I'm not involved with this particular transaction. We've advised the Saudis in the past on their gas initiative and on some other fracking matters. But I do think that what your reporting is really pointing out, and it's really helpful, is the Saudis may well have to make some adjustments in how they approach this, either on taxes or on some of the other, on how much they choose to sell to establish this sovereign fund.
Yeah, and I should give a shout out to Javier Blas, who did great reporting on that article. To your point, when you have a corporate income tax rate of 85% and Saudi Aramco is paying 20% royalty, that makes it really difficult for an investor to want to get involved and to have that kind of valuation. So do they have to lower that corporate tax rate, or as you mentioned, do they have to raise how much they're actually going to IPO?
It may be a combination, but I think I do think what it speaks to is that here's a situation where Saudi Aramco has 10 times the reserves, say, of Exxon, but because the tax regime is so heavy, that has a real bearing on the comparability. And so some combination of those two, and I wouldn't be surprised to see ultimately each of those being addressed as they move toward this. The key point is that the Saudis are embracing the notion of significant changes in their economic structure, and this is a key driver in achieving that. So, I don't think this is necessarily as devastating as it might first appear. It does require, however, sound judgments about how to address what will be market concerns vis-a-vis the current structure.
Tom, as things stand, and we've covered a range of issues with yourself already, as things stand, is the ultimate issue that the Saudis would like to value this based on the reserves, and there's no analyst out there that does that currently, with the likes of Total, the likes of Exxon, the likes of Shell, the likes of BP?
I'm sorry, what was the question?
Tom, the question is the ultimate problem that the Saudis would like to base the valuation of this company on the amount of reserves, and traditionally that's not how you value an oil company.
Well, that's right. There are other measures that are really critical when it's an operating enterprise. And I would also say the Wood Mac analysis really doesn't address what the integration benefits might be. And that could also contribute to some narrowing of the gap, more so, I think, than was identified in that article.
And Tom, before I let you go real quick, I want to take a look at oil at 54 for WTI. Are we at the top end of the range here?
What we're seeing is we're even at middle 50 oil, we're getting a supply response in the U.S. that is going to be a market reality. Until we have more confirmation that the global demand growth is above 1 million barrels a day, the answer to your question is yes.